Hello, 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 and welcome back to the podcast. Thank you very much for tuning in. I appreciate it. Today, we're going to talk about old people. This seems to be a very hot topic. And I may, depending on how in-depth I get, I may just throw in some key man buy-sell stuff here. But if not, it'll be in a different podcast. Okay, so be on the lookout for that if I don't throw it in here. Here is the thing. I am getting a lot of questions about or comments that I'm too old. And then the next person comes along and says, "Well, I'm only 70." People, I have a whole chapter in my book. So if you tell me I'm too old, I'm going to assume that you missed that chapter of the book. It is called Young versus Old. And old is a relative term, right? Some people will say, "Well, I'm 55 years old. I'm too old." And the next guy says, "Well, I'm only 70. So let's talk about what that means. Because old is everybody is concerned about, what is my cost of insurance? It's going to be too expensive. I am not looking at cost of insurance. You are not coming to me 99.9% of the time. You are not coming to me and saying, "Hey, Mary Jo, I need $500,000 of life insurance," or "I need $1 million of life insurance." No, instead, we are looking at it and saying, "Oh, you want to put 20,000 of premium in? That's going to buy you $500,000 or $1 million or $2 million of death benefit, depending on your age and your health and all of those things." And so when people say, "Well, I'm too old, I can't start." Number one, Nelson, the founder of the concept that wrote Becoming Your Own Banker, R. Nelson Nash, he was 52 years old when he really started to understand what he could do with these policies, okay? And share this knowledge with people. He had a heart attack at 52. He passed away at 88. He bought all kinds of policies, and he was not just buying them on himself because he was not insurable. He was buying them on other people. But here is what I look at when I do a policy. If you are under 55 years old, it's not a big deal. Over 55, at this point in time, with the cost of insurance, I am going to look at, what does that look like? How expensive is that? What are we trying to do? So typically right now, and I always say, what does it cost per dollar? This is what I mean. When you pass away, what did that dollar of life insurance cost you? So in most cases, if we're going to pass away, I'm usually always looking out to 85. So if we're going to pass away at a standard 85 years old, and you are 54 and standard health, we are probably looking at 40 cents for every dollar of death benefit. That means you paid 40 cents, but your heirs got $1, and they got that dollar income tax free. So when I say 40 cents on the dollar, that's what I mean. So if we are 55, we're probably at that 40 cents on the dollar. If we get to 60, we're probably at 45 cents on the dollar. 65, 70, at 70, we may very well be close to anywhere between 55, 60 cents on the dollar. Anything over 70, we might be closer to that 70 to 80 cents on the dollar. That is where I start to go, does that make sense? And so here are the things to look at. And these are all policies that if I'm doing a 10-pay policy, meaning we only pay for 10 years, that is my cheapest cost per dollar, is a 10-pay. But I have had a couple of clients in the last couple weeks that we don't care about the cheapest cost per dollar because they don't want a policy that ends in 10 years. Because let's say you are 60. In 10 years, you're going to be 70. But we're going to sell the business, or we're going to sell farm ground, or we're going to be selling rental property. And so if we do that, we're going to need a place to put money. So these particular individuals have said, I don't care about the cheapest dollar. I just want a place to put my money so I have more cash value. It compounds more. That's what I want to see, is a place to be able to put it, because I might not have heirs that I can buy a policy on. I may not have business partners that I can buy a policy on that's younger. Okay. So not always is it cheapest dollar of death benefit. So we have to look at what is going on. But those of you that are saying, oh, it's too expensive, you're the same people saying, well, they don't need all that money when I die. So then why are you complaining about the expense? If you're looking at cash value, and you see this in the book, at 55, 60 years old, your cash value will actually accumulate faster than a younger person in the first 10 years because you're going to die sooner. That policy has to endow, which means cash value and death benefit have to equal each other at age 121. So that policy has to do its thing faster so everything equals each other at 121 faster. So make sure that you are thinking about that, okay? And it all depends on what our goals are. I have a client who bought a policy, her mom bought a policy through another agent. And this policy, I said, why? And she was like 60 in tobacco. 60 in tobacco, we're like 80 cents on the dollar, man. It is expensive. And I said, I'd love to see that illustration. So I look at the illustration. I'm like, if mom dies at 85, 90 years old, like, you didn't make any money. You paid like 95 cents for every dollar of death benefit. Why would you do that? And she said, because we are giving my mom money. We're paying her for the business. And when she spends money like it's water. And so when she passes away, at least we know we'll get our money back. And I'm like, oh, yeah, that makes sense. But without knowing the whole story and what the objective is, you could very easily say, well, that's a really bad idea, right? So that then leads us into key man and buy-sell policies. So a key man policy is, hey, I have an individual that works for me that is a key man. Without them, this place is going to lose money, okay? There has to be a monetary value there. Walmart buys policies on their key men. The banks buy policies on their executives. Without those executives, the company is going to lose a significant amount of money. Then there are buy-sell, which means, hey, I am buying a business from somebody and I owe them money. So now I can have insurance on them and they can have insurance on me. If you are in business with somebody, if you are going to have first right of refusal to buy property and buy land, then you have the right to insure that person. Okay. If you have financials with somebody that you are going to have to buy their portion of the business out or owe money back to them upon their death, their family was going to be able to call a note that they have with you. That is a buy-sell. So a lot of times with key men and buy-sell, I am going to want to be writing insurance on the other person. Because in a situation where we're buying a business or taking over a farm operation, I want to make sure that I have the money to buy that family out. But what happens when they're 60, 65, 70 years old? You know what? At 55 and 60, all day long. 70, man, we really have to look at what we're going to be doing and if it makes sense to do that. Because that is when the cost per dollar of death benefit matters the most. Because you're paying the premium and you're receiving the death benefit. Because in a buy-sell and a key man, you own it. You're just insuring somebody else's life. So we want the cheapest dollar of death benefit that we can get. And we want to make sure that when we use that money, it's not for long-term debt. Because remember, the cash value is any loan is going to reduce the death benefit. So if we need that death benefit to buy somebody out, we don't want this long-term loan because we need the money to buy the family out or the estate out or the trust out or whatever that looks like. So that is when the cost per dollar really makes sense. Now, I have people that are like, dad is 70 or the other business owner is 70 and I want a policy on them. You're looking at, for $300,000 a death benefit, you're looking at $25,000 to $30,000 of premium a year for a banking policy. That is an IBC policy with 75% of the money going to death benefit, okay? Or going to cash value, 75% of the money going to cash value. So I'm not just selling straight up death benefit. So if you're looking at that and you're looking at traditional whole life, that's not what I'm talking about. So if you want a IBC policy on a 70-year-old with $300,000 a death benefit, we're at about $25,000 a year. That's with standard, maybe preferred health. Anything less healthy than that is more premium. Okay. So we have to look at, does that justify where we're trying to go? Now, I have had a couple of clients that they bought the policy 65 and 72. They bought the policy and passed away within the first 2 years of the policy. 2 cents on every dollar in that case. We just don't know. I have also had people in my office that are 80 years old and the kids want mom to buy a policy at 80. And I said, you guys, I cannot justify this. She just came from the doctor and the doctor said she is completely healthy and going to live a very long life. And I said, I cannot justify this. It actually goes backwards. At some point, if she lives too long, you've put in more premium, then we have death benefit. That does not make sense to me. I cannot sell that. And guess what? She died within the next year. I can't predict that. So I am always looking out at 85, 90 years old when we are likely to pass. Yes, if you pass sooner, it's a cheaper dollar, but that is the risk you take. So if you are somebody in your 20s and 30s and you want to buy a policy on somebody in their 70s, you're going to need $20,000 to $25,000 to have an IBC policy. If you want to buy a policy on somebody that's 50, 55, 60, we're going to need $10,000 to $15,000 to have an IBC policy. So know that going in, these key man policies are absolutely fantastic. If we can get 40 cents on the dollar, 45 cents on the dollar, so we can buy people out, that is fantastic. I just can't predict when somebody is going to pass. So when we get to 70, 75, 80, you get to make that decision, not me. I am not making a decision if this is a good call or not. Because there are times where I could take that same $20,000 of premium, put it on a policy on your life, and you would have more cash value in 15 years than mom and dad would maybe have in death benefit if we bought a key man or a buy-sell policy. Okay. Yes, you're going to have to borrow from your policy. It has to be paid back. but we have more accessible. What do we want? What are our goals? What are we looking for? There's so many factors. But the moral of the story here is if you are not too old at 50, 55, 60, 65 years old, okay? I'm only going to start questioning it at 70. And even then, can we just buy policies on other people? Do we have to buy them on you? And if you are trying to do buy, sell, and wondering, do I do a policy on mom and dad? Do I do a policy on my business owner, my partner, my business partner? Should I be doing those? Hopefully this kind of helped clarify that and at least give you an idea of how much premium you're going to need. In addition to the premium, when we do buy, sell, a person we're insuring, they have to give us their net worth, their gross income. They have to go through medical, that we get their medical records. They have to be involved. You can't just take a policy out on somebody without them knowing. So keep that in mind as well. But this just seems to be the hot topic recently of I'm too old, or I want to buy a policy so badly on a business partner and do a buy sell, but how much money am I going to need? So hopefully that gives you a little bit of an idea, but please, for the love of Pete, stop telling me you're too old when you're 50 years old. You clearly did not read the book. Clearly did not read the book. You don't understand. You truly are not understanding why we're doing this because you're not too old. So the next person that says that to me, I'm going to be like, did you actually read the book? I think I've already said that. And then they laugh at me. Yeah. Is it going to be more expensive than when you were 30? Yes, absolutely. 100%. But guess what? You either do it today or you don't do it at all. It's just really that simple. It's really that simple. I have had clients start at 72 years old because they're like, well, I don't plan to die anytime soon. I got a good 20, 25 years left. But we have plenty of time. It's all up in our heads. It's all how we think. If you think you're going to die soon, you're probably going to die soon. I talked to a lady not so long ago, and she said, yeah, my husband died in October or August, one of the two. She said he just knew he was going to die then because that's when every other family member of his died was that month. So he knew he was going to die then, and that's when he died. Power of your thoughts is pretty important. So what you think is what you get. If you think you're too old, you're too old. As always, let me know if you guys have questions, comments, concerns, ideas for topics. That is where today's came from. Buy, sell. Somebody asked me to touch on that again, and I've touched on that in the past, but it is always a good reminder. And so if you have questions and anything that you want me to make a topic, I'm happy to do it. Mary Jo at withoutthebank.com. If you've not gotten the book, please go get the book at withoutthebank.com or farmingwithoutthebank.com. Either one, you can get the farming, the life book, and Nelson's book, or get the bundles, get the audios, whatever tickles your fancy. Just get it and get started. And then as soon as you get the book, book your appointment. I am already booked out to March at the time of this recording. And so as soon as you get your book, you're going to get an email with a link to my calendar. Schedule your appointment and read the book in the meantime. You will have plenty of time. If you are scheduled and in the next 8 weeks or 6 weeks and you are wondering if you can get in sooner, call the office. Email Mary Jo at Without the Bank, ask to be put on the waiting list. We do have a waiting list, and Tiara will call you and let you know if you can get in sooner because people cancel. Just like at the time that I'm recording this, somebody canceled, she already filled that spot. Okay, somebody got bumped up to tomorrow. So please let us know if you are waiting to get in and you would like to be put on the waiting list. All right, I think that's it, you guys. Thank you for the content. And I appreciate you listening. If you want to give me a 5-star review on either podcast, I would love it. Share it with your friends. And as always, have a fantastic rest of your day.